Listen up. If you're a senior, a green card holder, a naturalized citizen, a visa holder who files U.S. taxes, or anyone who wasn't born a U.S. citizen, there's something you need on your radar for 2026. Because if this change rolls out the way it's being described, it could change how you file your taxes permanently. And if you miss it, it's not just, oops, I forgot a box. It could mean IRS letters, penalties, audits, and for some immigrants, extra headaches with immigration paperwork. I'm not here to scare you. I'm here to prepare you. CDBot, no drama. Welcome to Dream Visa Updates. My name is George, and in the next few minutes, I'm going to break this down in plain English. What's changing, who it could affect, and what you should do right now so you stay fully protected. Here's the core issue. Starting with the 2026 tax year, meaning the tax return you file in early 2027, there are claims that the IRS will expand mandatory foreign asset and foreign income reporting questions directly on the main Form 1040. The big idea is more transparency. The government wants more detailed disclosure from certain taxpayers about money, accounts, benefits, and assets connected outside the United States. And the groups being targeted, according to what's being shared, are people over 60 and people not born U.S. citizens, so that includes many seniors, green card holders, naturalized citizens, and many visa holders who qualify as U.S. tax residents. The practical change is this: questions that used to live in specialized forms or that people didn't realize applied would show up right on the main return where you can't miss them. And the questions are expected to focus on things like foreign bank accounts, foreign pensions, foreign Social Security type benefits, and international money transfers. So even if you filed the same way for years, the 2026 return could look and feel different. Now here's where people can get burned. Imagine you file the same way you always do. You skip what you assume doesn't apply. Then you get an IRS notice saying you failed to report something you didn't even realize you had to report. That's how penalties start. That's how audits start. And if you're in the middle of an immigration process, that kind of tax mess can turn into delays and extra scrutiny. So let's talk about the biggest piece: foreign asset thresholds. Right now, under existing rules, many taxpayers only deal with Form 8938. This is FACA reporting, if they cross certain limits. For a single filer living in the U.S., one common threshold is over $50,000 on the last day of the year, or over $75,000 at any point during the year. But the 2026 change being discussed claims those thresholds could drop, specifically for seniors and immigrant filers. The numbers being circulated are $25,000 at year-end, or $40,000 at any time. If that happens, that's not a small adjustment. That's a huge expansion, because now we're not just talking about rich people with big offshore portfolios. We're talking about normal people who have things like a bank account back home, a small retirement account from years ago, a life insurance policy with cash value overseas, a partial interest in family property, or an old account you keep open just in case. Now let's be very clear about something else. FBAR is already a rule today. FBAR means if the total combined value of all your foreign financial accounts goes over $10,000 at any point in the year, you may have to file an FBAR electronically with FinCEN. That rule is not new for 2026. It already exists. What's changing, if this new system is implemented, is enforcement and cross-checking. The claim is the IRS will compare what you answer on Form 1040, what you report on Form 8938, and what exists in FBAR filings. And if you say yes in one place but don't file the related form, or your numbers don't line up, that mismatch could trigger automatic IRS notices and possibly audits. Meaning, less room for "I didn't know," "I forgot," or "it was small." Now the next question: why seniors and immigrants? The explanation being given is that these groups have more unintentional mistakes with foreign reporting. Seniors often have long financial histories, worked in another country decades ago, receive a small pension overseas, kept an account open from back home, or lived abroad and returned. Immigrants often keep financial ties outside the U.S., supporting family, managing property, saving in a home country bank, handling paperwork overseas. From their point of view, it feels separate from U.S. taxes. But under U.S. rules, worldwide income and certain foreign accounts can still be reportable, whether it feels connected or not. And the government doesn't care if it was intentional or accidental. A mistake is still non-compliance. That's why the strategy appears to be put the questions directly on the main return so nobody can say they didn't see it. Now let's get practical, because that's what matters. What should you do to protect yourself? Step 1, Make a full list of anything you have outside the US. Not vibes, not memory, a real list. Foreign bank accounts, foreign pensions, investments, cash value insurance, property interests, business ownership, anything that could count. Write down institution name, country, account number if available, and the highest balance or value during the year, because most people get in trouble for one reason: they were disorganized, not dishonest. Step 2. Check if you should have been filing FBAR already. If your foreign accounts combined ever crossed $10,000 at any point in a year, FBAR may have been required. If you realize you missed it in past years, don't panic, but also don't ignore it. There are IRS options, including streamlined filing procedures in certain cases for people who were non-willful. Ignoring it is the worst move, especially if enforcement tightens later. Step 3. Get ready for Form 8938 if your foreign assets might be above the lower limits being discussed. If those $25,000, $40,000 numbers become real, many people who never filed Form 8938 will suddenly need to. And that form requires details and values in US dollars. If you wait until tax season, you may be chasing foreign statements, old records, and bank documents at the last minute. Step 4. Make sure your foreign income is being reported correctly. This is huge for seniors. Foreign pension, foreign retirement benefit, foreign social security type payments, foreign rental income, foreign interest. A lot of people assume it was already taxed overseas, so the U.S. doesn't care. But the U.S. often requires reporting worldwide income. Yes, tax treaties can sometimes reduce double taxation, but you still need to report properly to claim treaty benefits. And if the 1040 questions expand the way people are saying, skipping it won't be an option. Step 5, especially for green card holders and anyone planning citizenship, keep clean, organized records. Save copies of tax returns, FBAR filings, Form 8938 if filed, supporting statements showing values and balances, because immigration reviews can involve your tax history under the good moral character standard. A missing form or mismatch doesn't automatically ruin your case, but it can absolutely cause delays, extra questions, and more scrutiny. And many delays happen for one simple reason: people can't prove they did things right. Let me give you a real-world style example. A senior immigrant has lived in the U.S. for years, always files taxes, honest person. She keeps about $15,000 in a bank account in her home country, just for trips to visit family. She thinks, it's small, it's back home, it's not connected. So she never reports it, never files FBAR. Then she applies for citizenship, and suddenly the foreign account question comes up. Now the application gets delayed while she scrambles to fix prior filings and prove it was unintentional. Stress, cost, fear, all over a small account. If the new reporting questions become mandatory the way they're being described, situations like this get harder to miss and harder to accidentally ignore. Now, quick answers to common questions. Does this change how regular U.S. Social Security benefits are taxed? No. This is about foreign pensions and foreign government retirement benefits, not normal U.S. Social Security. Do tax treaties still apply? Yes, treaties can still help. But you have to report correctly first to use them. And now, penalties, because this is where people underestimate the risk. FBAR penalties can be severe. For non-willful violations, penalties can be up to $10,000 per account per year. For willful violations, it can be dramatically higher, sometimes tied to the account balance. Form 8938 penalties can start at $10,000 and go up, potentially as high as $50,000 if the issue continues after IRS notice. Also, failing to report foreign assets can extend the time the IRS has to audit your return. And for immigrants, tax non-compliance can complicate visa renewals, green card processes, and citizenship timelines. Again, most people who get hit didn't mean to do anything wrong. They just didn't know. The entire point of these changes, as described, is to remove the "I didn't know" situation by making the questions impossible to overlook. So here's the recap. Fast, clear, no gumafiraki. Starting with the 2026 tax year, the IRS is expected to push expanded foreign connection questions onto the main Form 1040, targeting seniors and people not born U.S. citizens. The goal is stronger compliance on foreign accounts, foreign pensions, foreign benefits, and cross-border money activity. Thresholds for Form 8938 are being discussed as lower for these groups, meaning many more people could be required to file. And cross-checking between your 1040 answers, Form 8938, and FBAR is expected to be tighter, so mismatches can trigger notices. If you're a green card holder or planning citizenship, Accurate reporting and clean records become even more important because tax inconsistencies can slow things down. No panic needed, just preparation. Get organized. List your foreign connections. Make sure FBAR is handled if required. Prepare for Form 8938 if you may cross thresholds. Report foreign income correctly. Keep records like your future depends on it, because sometimes your timeline does. If you want more updates like this, simple, direct, and focused on what actually affects your life, subscribe to Dream Visa Updates. And one last thing, this is general information, not personal tax or legal advice. Rules can change, guidance can update, and every situation is different. Always verify with official IRS updates and get a qualified tax professional if you have foreign assets, foreign income, or immigration plans. This is George from Dream Visa Updates. Stay organized, stay compliant, and I'll see you in the next one.